You're not worth, you guys are not worth $50 million because you started an internet company last week. But this is how it was working for a while. It was crazy. But, I got the same things during the real estate bubble. I remember, I was renting houses. And so I would go and, I'm still renting my house now in Connecticut. And I would go to, houses for rent. And I remember one time I went and there was a house for rent. I looked at it and the realtor was there. And apparently the person who was renting it out was an investor who just bought the place. And I asked them, what was the rent? And I would forget what it was. Maybe it was $4,000 a month, whatever it was for this place. And I said, well, what did the guy pay for this? What did he pay? And I said, how can he make any money renting it out to me? Isn't this going to lose money? Doesn't he have negative cash flow? They said, well, yeah, he loses a couple $1,000s a month. And I said, well, and I said to him, but you recommended this as an investment? He says, yeah. I said, well, but why would you recommend as an investment property, a property that has a negative cash flow? Why would you have him buy it? And he said, well, you don't understand. This property is going to appreciate. This property can double in the next couple of years. And I said, why? Why would it double? You can't even cash flow it positive at the price it's at now. How's it going to go up in value? And I said, real estate is a function of rents. And then the guy said to me the same thing. He said, you don't understand real estate. He was telling me that rents don't matter to real estate. Just like when I was telling people to buy stocks, they were telling me dividends don't matter. I'm buying this stock because it's going to go up. Well, why should it go up? It doesn't even pay a dividend. It's already, who would buy it? I did the same thing when I rented my apartment. I was renting an apartment. After I got divorced, I was renting an apartment in Stamford. And beautiful apartment, right on the water. I had my boat there. Beautiful views of the sound. I had right on the corner. Great unit, beautiful building. I had a concierge. It had, pool. It had, covered parking. It was a security building. It had racquetball courts. Had a gym with a trainer on staff. A lot of amenities. Right next door, there were maybe 20-year-old townhomes for sale. And I went to one of the open houses just for kicks. And there was a unit on sale, whatever they wanted, $500,000 or $600,000 for this unit. That was about the same square footage as what I was renting. But it had no view of the water. It was dark. It was old. There was no security. It had none of the amenities. Yet the property taxes and maintenance fees alone were like $1,000 a month. And by the time I would have paid the mortgage, if that's how I financed it, I would have been spending more money per month to live in one of these little places than this really nice apartment that I was renting right next door. And I asked the realtor, I said, why would anybody buy this place? You could just rent right next door. There's more units available. I know I just rented. And the lady said to me, well, but when you rent, when you move out, you're not going to have any equity. I said, well, what do you mean? She says, well, when you buy this property, then, it appreciates, and then when you can sell it, when you move out, you make money. I said, well, why the hell should it appreciate? Didn't you understand? It's already overpriced. You can rent right next door. Why should it go up? And she said, well, that's how real estate works. I said, so you mean the way real estate works is I have to sacrifice. I have to turn down the opportunity to live in a really nice place. I live in this dump for a while, and because I did that, I make money. And somebody else is going to come to me a year or two from now and overpay by even more. And say, I don't want to live in that nice place next door. I'd rather pay more to live here because this is going to appreciate. And they totally forgot, what real estate meant. Real estate's a place to live. But everybody thought it was going to go up, so they were all crazed. But anyway, getting back to where I was before I went off on all these tangents. So we had the stock market bubble because the Fed was too easy. And eventually, Greenspan started to raise interest rates. He saw what he was doing. He talked about irrational exuberance back in 1996, and they took him to the woodshed because he said something negative, so he shut up going forward. But eventually he started raising interest rates, and he burst the bubble. He burst the stock market bubble. And of course, when the stock market bubble burst, a lot of the malinvestments were exposed. A lot of people that were working at these .coms, well, they needed to find real jobs because they were wasting their time. Because they were destroying wealth. They weren't creating anything of value. So we had a lot of companies that had got capital that shouldn't have got capital. A lot of people invested foolishly. They're going to lose their money. But we were going to go through a painful recession, certainly, as we digested and worked off those malinvestments and allowed capital to be reallocated to where it could be productively used, which meant labor, which meant their land, capital, whatever was involved in these businesses. And, of course, with all the wealth that was squandered, because remember, as people invested in these new companies, the money was just spent. It was squandered. It wasn't put away productively, so people lost real money. So people were going to have to come to terms with the fact that they lost money, and they were going to have to try to save and replace it. So there was going to be a big recession when George Bush came in. But rather than being honest and admitting that the Clinton era was a fantasy, was a boom, and now we had to live through the bust, and that would have been a perfect opportunity right away to repudiate what had happened under Clinton and say, look, Clinton didn't give us a good economy. We had a bubble economy. And now the bubble has burst, and we've got to clean up the Clinton mess, and it's not going to be fun. But instead of doing that, he was like, well, we need to stimulate the economy. We need to fight off this recession. Sounds familiar, right? So he wanted an economic stimulus. And what was the economic stimulus that we got out of Bush? Deficit spending. Cut taxes. Increase government spending. And Alan Greenspan cooperated and slashed interest rates down to 1%. And so we had massive monetary and fiscal stimulus, massive inflation. And what was the result? Well, we blew up another bubble, a bubble that was bigger than the one that just burst. And of course, during that shallow recession that we had, and Bush was so proud of that, so proud of the fact that he kept the recession from being more substantial, we had record car sales. We had record auto sales. Well, where'd Americans get all the money for all these car sales and all these homes? Well, they borrowed it all. We went into debt. We had a massive spending spree, the biggest spending spree in world history. We borrowed trillions. What do we do with the money? Spend it. We build houses. We remodeled our houses. We bought cars, appliances, furniture, gadgets, iPods and cell phones and plasma TVs, all sorts of things. We didn't make any of the stuff. We just borrowed the money to buy it. And our trade deficit just skyrocketed. I mean, we started running $60 billion a month trade deficits for years. And our savings rate went negative. And it went negative even after the government doctored the books and recalculated how we calculate savings. I mean, if they were calculating the savings rate the way they did 10 or 15 years ago, it would have been minus maybe 5 or 6%. But they changed it, and they decided to count certain things as savings that in the past they didn't count because they wanted to make the savings rate look higher. Although at some point no one even cared, I mean, whether we saved any money or not. No one thought that we had to save any money. So we had this huge bubble that was much bigger than the stock market bubble. And of course, the major difference, and something that I pointed out repeatedly, was the leverage involved. I mean, when people bought stocks, they pretty much bought it with their own money. And if they got a margin account, maybe they had to put 50% down. And many of the brokerage firms were requiring higher margins on internet stocks. So when the bubble burst, the losses were pretty much confined to the people that made the bad bets. And at least when the losses happened, nobody tried to bail anybody out. If you lost money, you lost money. Right? There was no one looking to the government to get their money back because they bought a .com stock that went to zero. Right? None of the brokerage firms failed. Nobody failed because they had loaned money to people to buy real estate, to buy stocks. No. This time around, of course, everybody who bought real estate did it with somebody else's money. Very few people were paying 100%. Many people were buying real estate with none of their own money. People were buying real estate with nothing down. I mean, is it any surprise that people gambled when they had nothing to lose? And especially when they had so much to gain. Real estate prices were rising. At one point in California, they took a survey, I think back in 2005, and the average home buyer believed that his house was going to appreciate by 20% a year for the next 10 years.